Hello everybody, Cantonese Cat here. Figure while I still have a voice, I'll go ahead and do a third video of the day, just kind of let you know what I think about the markets. In general, I think there are people who ask me to make a video with an update about, SPY, QQQ, the indexes, what I think is going on with the market. So I'm just going to spend a little bit of time to go through that. This is the chart for SPY, the S&P 500 index ETF version of it. The very first thought, first of all, nothing has changed, obviously, right? This is a monthly chart. You're looking at a curling up kind of 20-month moving average, which again shows you that this is the start or very beginning of a possibly very powerful bull trend. The thing about it is it did break above the all-time high, and I do think that somewhere maybe over the next 12 months or so is probably going to hit the 1.618 level at the $561 range right up here. But nothing goes up in a straight line, right? This is the S&P 500. This is not Bitcoin. If it was Bitcoin, I would just say, hey, you just keep going up like crazy. It can defy physics and it can get above the upper Bollinger Band and it's going to be fine. But this is SPY. The SPY generally gets confined inside the upper Bollinger Band. I think we're a little bit overextended. If you just look at history before, if you ever get overextended like that, the next month is usually going to stay back inside of it. Same here. Like, it really never kind of gets that far ahead because it's just not Bitcoin, right? Very similar thing going on here. And if you just look at it, it can ride underneath the upper Bollinger Band going up, but generally it doesn't stay above the upper Bollinger Band for that long. So that's probably why we end up getting a little bit of rejection for the month before, and that's probably why there's a potential that we're going to have to start cooling off here a little bit, right? If you look at the QQQ, which is the NASDAQ version of, the ETF version that reflects the NASDAQ 100, very similar phenomenon. It's not as impulsive as SPY actually when it comes to Bollinger Band, and is trying to get confined inside, which is fine because that's kind of how it's been majority of the time, doing. It does get a little bit more impulsive compared to the SPY ETF at times, but I think right now it still looks like pretty healthy price action. Now, if you ask me what I think about the QQQ or NASDAQ in general, where it's going to go next, it's really hard to say. If you look at the prior behavior after it breaks up from the previous all-time high and forms a new higher high, there is a potential chance for it to come back and back test it, right? So let's kind of take a look and see what I meant. The COVID crash was really kind of hard to show, but here you can see like it back tested a couple times after it makes these higher high. It actually does go back into that level and try to back test that to make sure that it's support. Over here, something around 2011, 2013, it tried to make a much higher high, but then it eventually backtests after a couple months to make sure that this level is nice and steady before it just kept going up, right? Even from the great financial crises, with a pretty impulsive shot up here, it does tend to want to backtest this previous all-time high level. It takes about a few months for it to do so before it goes up, right? So there's a possibility where the QQQ could end up over the next couple months coming down, back testing this level is entirely possible, right? Even in the setting of increased global liquidity, nothing goes up in a straight line. It's actually a healthy thing for it to kind of go down and back test, make sure that you get pretty good support down here before going up to the next level, which I really think is going to be 504 at the 1.618 Fibonacci levels from the previous all-time high to the lows of the 2022 crash. Now, what do I think is going to happen in the more immediate future? That's hard for me to say. I do want to point out a couple things here. One thing is to look at the Nvidia chart. The one thing that starts to concern me in the short term, I think Nvidia is going to keep going up. Like, don't get me wrong. Like, we give enough time, I think that is a fundamentally sound company. I think that the valuation concerns are overstated, and I do think it's going to go past this level and going to keep going up higher. But it is a very important potential resistance level right here at the 2.618. Right. You can see what happened on the 1.618 level before. Once it hits there, the algorithm kicks in, traders sold. Doesn't matter how good the earnings are over the next course of 1 or 2 earnings. The algorithm kicks in, traders sold. It doesn't matter. Right? Went back down. Guess what? It didn't stay down for that long. After a couple of months, it went right back up to this level and trying to push through. Right now, we're a little bit over outside the monthly upper Bollinger Band. There is a potential if we get a good earnings, it could overshot that and come down and do a back test here and then keep going up. There's always that possibility. It's a more of a conservative way to kind of think about it. More than likely, it's probably going to end up coming down, maybe to try and find some kind of support somewhere around here. And I don't know how far it's going to go down to find support. Potentially it could bounce back down closer to, to even to this level here is not unheard of. I mean, SEMI just dropped like 20%. So it's possible for Nvidia to go down, to the 500 level, wait for the 20-week moving average to kind of catch up before continuation. Or you can just keep shooting up and just keep expanding the Bollinger Band and just keep going up like, defying physics. There's always that possibility, right? Like it did kind of over here, it just keeps going. It's possible. But it does make me wonder, now that we're resistance, I have a hard time just being super bullish short term. I'm still super bullish long term. And I still think that this could also keep pushing the entire market like QQQ to continue to go up higher. Eventually, probably by the end of the year or early next year, probably reach the 1.618 level, both for the QQQ and SPY. But it does make you wonder whether or not there's some short-term headwind here. Now, with that said, I also want to point out, so it's not entirely a bad thing for it to go down because it is a very strong bull market, both on the monthly and the weekly. This is the weekly here. It did have a red candle here on the NASDAQ or QQQ. It did have a red candle, weekly candle here on the SPY, the S&P 500. But guess what? Didn't have a red candle this week. IWM, the small caps, Russell 2000, that's been this huge laggard is still pretty far away from its all-time high. You probably have to push up another 25% to really get up to the all-time high there. So it's good that there's rotation, right? It's a healthy bull market to improve breadth overall. And if you look at the monthly, you're also starting to have this curling up 20 moving average could go up. And you're also starting to have the price kind of touching the upper Bollinger Band, trying to expand it, trying to move it up. So this is a good sign that this could just be a healthy rotation, even if, let's say, for example, QQQ is to come back and test some of these levels underneath. And it could be a pretty vicious drop, right? From 430 to like 408, it can be a pretty vicious drop, right? It doesn't have to happen, but if it does, it could simply be that is rotating money over to the small caps. Why do I also think that there could be a potential to rotate over to the small caps? Well, these small cap stocks are generally a little bit more rate sensitive. And if you look at the rates, there are a lot of people that have a lot of fears about rates. There are a lot of people now, I'm hearing people saying, oh no, rates are actually following, like the real rates are actually following what Jerome Powell and the Fed is doing. No, I think that the Fed follows market conditions. I think that Fed are going to follow what the rates are going to do. The rates basically is trying to make his one last stand up here, or trying to push through and trying to see if it can get above. But this is actually a very weak look to the 2-year yield right here. You are going to try to have some pushback up here. In the past, that has been the case too. Before things roll over, you're going to have some pushback up, right? But it doesn't necessarily mean that rates are going to keep going higher or they're going to end up raising rates. Like, I really don't think so. It has that rolling over look. And the trend, is your friend, is trying to flatten. And when it flattens, it could drop. And it could drop faster than you think. If you look at the weekly, you can see that it's actually showing some really, really weak behavior on the 2-year yield. It's trying to push up against a negative sloping 20-week moving average. And so far it looks like it's getting rejected. I cannot be bullish on the 2-year yield here. People are thinking that, the Fed's going to raise rates and rates going to go back up. You know what else agrees with me? The IWM does. These rate-sensitive stocks, you end up closing the week green. Another way, in addition to looking at the 2-year yield, you can also look at a 10-year yield. It's doing the same thing on the weekly. It's trying to go up. It's got like this really weird weak bear flag trying to go up, pushing against this negative sloping 20-week moving average, and it's looking pretty weak here. Going up to the monthly, a very similar thing can be seen. The moving average of the 20-month is starting to roll over. The fine support is trying to bounce, but it's starting to really get weak in here, and the trend is getting exhausted. You can see that with a lot of these kind of bearish diversions over here to even the price, or so even the yields going up. You can see some pretty bearish divergence going over here too. And I called this out, a few months ago. I think that it's going to drop. This is probably like the last hurrah. I don't know how far it's going to go before it starts dropping. Looking at the weekly, I think this could be a pretty sweet spot for it to find rejection and keep going down. It could go up a little bit higher. Who knows before it goes down, but I think that the Fed's going to follow market conditions. And so far, the 10-year yield and the 2-year yield on the weekly chart and on the monthly chart just looks really weak. Weak. Now, the US dollar, on the weekly chart, it did stay above it, but because of the fact that it's negative sloping here on the 20-week moving average, I think this is probably going to be a false breakout, and it's probably going to end up dropping just because the 20-week moving average is down sloping, so it's not going to serve as very good support. It's going to slip down, probably, right? If you look at the monthly chart, it got rejected. It rolled over. It's starting to roll. It's starting to flatten, and it dropped down and it's trying to backtest, and it got rejected. This is pretty bearish for the US dollar, and this overall, this is a monthly thing. There could still be a lot of volatility over time, right? But overall, this is pretty bearish for the US dollar, and could potentially be very bullish for risk assets like stocks and Bitcoin and IWM moving forward, because I really think US dollar is looking like it wants to roll over. And I'm just showing you what I'm seeing here. Now, in addition to all that, some people ask me about oil, what I think about oil. This is what I think about oil. I see a descending triangle here. And descending triangles are typically considered to be bearish. When I saw this over here, I wasn't sure which path it's going to go. Is it just going to go down and test the bottom here? Is it going to bounce up here at the 20-month moving average that's negative sloping and then get rejected and go down? Or is it even going to go up to the top of this descending triangle and didn't quite find support down here, got rejected and go down? There's no way for me to tell, but the trend is your friend. I think in 2024, and I agree with Jesse too. I think in 2024 this is you're gonna get some cheaper oil prices. Like it's gonna probably fall below 70. Jesse has been calling this for a long time. I see the same thing that he's seeing for a while. And the trend is your friend. I really don't see inflation being the issue. I agree with Jesse that I think the deflation in China is being exported over, and it's showing on the oil chart. It's not gonna be a push of force in terms of inflation. I think we're probably more worried about deflation than anything else. The Fed knows it, rate knows it, US dollar knows it, but CNBC they're not going to tell you that. Those pundits on CNBC, they're not going to tell you that. One other thing I think people also kind of ask me about is gold. And now there's an ETF of gold, GLD, that I like to track occasionally. And I've been looking at this for a long time. I'm not particularly bullish on gold either, even though I'm now more equivocal. I'm really not sure. Initially, I really thought that it's starting to have this like stage 3 look. And this could look like distribution here. And it could be rolling over anytime soon. It could also potentially be reaccumulation, right? Like they look the same. There's no way for me to tell. When I was looking over here, like I really was very bearish on gold because the trend seemed to be changing. But this bounce back, from the lower Bollinger Band to the upper Bollinger Band and is finding support at a rising 20 moving average. I'm actually turning a little bit more bullish on gold. I don't know how fast it's going to go up, but gold, there's also potential for it to reverse going down too. This trend is very difficult for me to call. I wish I would be a lot more bullish on gold. I wish that it had a greater deleveraging event. Like from here going down to here I guess it's a lot, 20% drop is a lot for people who are holding gold, but it's nothing compared to the drop they had before. If I would have seen like a great deleveraging event like it did back in, between the years 2011, 2015, 16, if I would have seen that, and if I would have seen the trend change over here, I would have been a lot more bullish, because a lot of people that are in gold are getting deleveraged, and once the deleveraging happens, that usually means that it's a time to buy, right? So I think that would have been nice to see that. I didn't really quite see that. You did have a drop here. It probably was very vicious for a lot of gold bugs, but it didn't quite have the deleveraging that I was looking for. And when I don't see huge deleveraging, and I actually feel that the upside of it may actually not be as significant, because a lot of times you want to have deleveraging of a lot of the retails, a lot of the weekends to be shaken off before the big money really want to, try to push the money up higher. But I'm not really seeing that. So I'm equivocal when it comes to gold. I think there are better investments out there in terms of the trend, in terms of things that have been deleveraged so much, and now there's increased liquidity. They're going to push up a lot higher. And gold just simply hasn't really given me that feel to it, if that makes any sense. So I'm going to delete that, because that doesn't necessarily apply anymore, given the fact that the 20-month moving average keeps on crawling up. I think it could go up, but I'm just not sure. I'm not going to put any money in gold at this point. A couple other things too. I want to comment on one more thing. Now that it seems like small caps are on the up and up, now that it seems like, despite the correction, like slight correction this weekend, seems like Bitcoin is still beasting, right? I'm seeing posts on X, including my friend Chris, who's super into miners. I am too, right? But the thing is, you're starting to have these narratives out there that people that are into miners and they're worried about opportunity costs. If you end up staying in fintech stocks that doesn't do anything, like PayPal or SoFi, it's just they don't find, or like Upstart, they just don't find the risk and reward ratio for that. Well, because they could be very well at timing the market. These people have different risk tolerances compared to other people, right? Like, for example, if you look at the PayPal chart, the downtrend was pretty vicious, right? The price did go from all the way from 300 going all the way down to 50 or 60 range. Oh no, that's terrible. And if you're looking at SoFi, oh no, the price dropped all the way down from high 20s all the way down to $4 or $5. Oh no. Well, the thing about miners is that the drop and the volatility is even more than that. You're talking about Bitfarms at the peak of it is $9. At the bottom it is 30 cents. It's completely different ballpark. It's for different people with different risk tolerances. The way I like to look at it is this, right? Who you want to date? What kind of romantic relationship do you want to have? Do you want to date somebody who you can take home and meet your parents, and that they're going to be a lot less volatile, and you're going to be able to figure out their behavior a lot better? Even though, there are ups and downs, as there are with any relationship, there are ups and downs. But the downs may not be as bad because they're just not as volatile. There are certain expectations. And that, things, even if they're down, that things could, potentially go up and up again. And there's a lot more stability compared to a big hot model like these miners right here, where it can just drop from $10 to 30 cents. They're too volatile for some people to be able to hold. Some people are just not meant to date models, right? Some people should never date models because that's just not what they can handle, right? And nothing against you if you're a model. Like, you're probably got a really great personality. People probably objectify you more than they should, and they probably should get to know you better. I'm just trying to make an analogy here. I'm not here to offend anybody. But some people should never date models if they don't have the mental capacity for it. And that's just how it is. Like, I don't know what else to say. Like, you want to be able to sleep better at night. And so for some people, this is just not sleeping better at night. So for people like Chris, for people like Freedom by 40, these are a way to go, because you look at the bull trend, you know where it's heading. These people are very smart. They know what to do. They're also got their exit plan in their head already. And but as opposed to people who you want to play like the long game, you want to play safer bet, things like that. There is bottoming behavior on PayPal. These are very boring compared to these race cars, things like that. I personally like to have like a really really old car that's reliable. It can break down from time to time, but I know the maintenance is not going to be high, versus being in something crazy that can go up and down, like Bitfarms or Mara and all of these stocks. Again, Mara all the time is like 80. It dropped all the way down to like $3. Just keep that in perspective. I want you to figure out what your risk tolerances are. This is not financial advice in general, but the only advice I have really is to try to figure out who you are, come up with a plan, and stick with it. I don't care what the plan is, but just figure out who you are and figure out a plan, stick with it. Don't let any other person influence you, unless if you give a serious thought into what you want. And if you want to change your long-term plan, fine, learn from it. But I don't know if anyway, been 20 minutes. I'll shut up now. Thank you for listening. Bye.